Hello everyone, this is Evidence Nkosi, the dollar chaser here. If you're watching this video, just know that you're also a dollar chaser. So guys, welcome back to our unlocking profit part 3. So guys, today we are going to talk about I can say that the most important concept, which are 3 concepts, which is equilibrium and break of structure and imbalances. So guys, we remember today we are only focusing on these 3. These ones are the building blocks, and they are also confirmations to take a trade after seeing a liquidity sweep. So by now I hope you all understand liquidity sweep, because on part 2 we talk about it a lot. So today we are continuing. Today we will be talking about the imbalances, the break of structure and the equilibrium. So guys, let us start with drawing a sketch, or example sketch. So let's say that price it was consolidating here, and after that price swept liquidity and drops up to this zone here. So guys, we can observe, first thing that we want to see when we are looking to take a trade is the liquidity sweep. The liquidity sweep. Okay, we observe this liquidity here. This liquidity here, it was swept. Good, liquidity was swept. So in mind we have a narrative that okay, price actually wants to go down, so the structure is going down. So the structure here, as you can see here, price was consolidating, and that consolidating created a high, a low, and a higher that swept the liquidity. So we can observe here, okay, this low here that was created was broken by the price when it was going down. So this is our break of structure. So you can observe break of structure is everywhere, but we are only focusing on the break of structure that happened after sweeping liquidity. So even here, this one also, it is a break of structure. So it is a break of structure, this one also, but we don't really focus on this one, because here there was nothing extra that was happening. Well, we swept this liquidity here, but we were not interested on this one, on this lower one. So we are looking forward to sell, right? So liquidity was swept on the upside, price dropped to the downside. Now we are looking to take entries. What do we have to do first? So the other concept come in again, which is equilibrium. So on equilibrium, I will use this tool. So you can see the name of the tool here. It is gun box. So this tool, it is what measures my equilibrium of the trade. So I will just measure the movement that was made before. So okay, I see, okay, this here, the 0.5, it is the 50% zone. Here, this zone, it is called the premium. This one is called the discount. So right now we are selling. When we are selling, we were looking to sell at a higher price. So we are looking to sell when price is at this zone. here, therefore we take our sell. So for price to come to our zone here, which is our discount zone, because here we are talking about equilibrium. So equilibrium, it is just this 50% zone. So yeah, just tell us that okay, when price is at this zone, that's where we will sell. So again, also imbalances are found on this zone. Remember I said today we'll talk about break of structure, equilibrium, and imbalances. And imbalances also are found right here on this zone. And there are two types of imbalances, which is the order block and the fair value gap. So as you can see here, this is a break of structure. I will start by showing off a order block here. So this is the break of structure we see, but to find a order block, which means from that break of structure to the level where liquidity was swept, this whole zone here becomes our order block. So yeah, this zone become our order block, the whole of it. So and then on this zone again, if you, but order block is always there. There is also another type of imbalances, which are fair value gaps, the gaps that are created in between of the candlesticks. I will show you on the live chart how they look, but here I was just giving you a narrative. So what are we going to do right now? We marked our zone, we studied the price, the market when it was here on this zone. We studied the market here on this zone to see if we're to see where actually price want to react, so that you can catch that reversal. So in mind, we know that price might come here and or will come here to fill these orders here, so that it can drop for the confirmation of the trade, which is the trade was the liquidity on the upside. So we can wait for price to actually start from here and reverse. When price get inside our order block or fair value gap, which is also in our discount zone, that's where we will enter for a sell to target the previous liquidity that is created here. So guys, this is the narrative of the strategy that I actually use. So hope you guys can see it. The building blocks. Step number 1, we want to see a liquidity sweep first. Step number 2, we observe the price after it swept liquidity to see the break of structure. We know this is the low that was created, so break of structure here. After break of structure, we'll mark the high movement that is prior to that break of structure or prior to that liquidity sweep. And again, we have to, when we use our tool, which is the tool of measuring the equilibrium, it aligns with our point of interest here, with our strategy here, with our direction that price might come back to our discount zone, so that you can sell. So guys, right now I think let's go to the live market. Yeah, but I can even show you on where price is it is going on and upward. So you can say, why am I starting with this? So you can say, okay, we can say that price was actually consolidating, therefore it swept the liquidity to the downside and push higher to that level. After pushing higher to that level, okay, we'll observe this liquidity here. Okay, we see that, okay, this liquidity was swept, then price did what? Price broke a structure here. Mark this important zone. Price broke a structure here. Yes, price broke a structure here, and after that we can use our tool to see actually where price want to retrace break before stretching out. So we can see, okay, this zone is our discount zone, so we can't buy a asset where it is more costly. Yeah, when it is more costly like this. So we'll have to buy the market when it is down here on this level. So right here on this level, we observe that this whole zone here to the downside, this zone here from our break of structure to the downside, that's where price will be attracted and go back. So in other cases there will be fair value gaps here. I'll show them on the live chart because these are not this line is not a candlesticks. I can't see a fair value gap. So fair value gaps, you only see them on the candlesticks on the live chart. So here, okay, we observe that, okay, price created all that. Right now we are waiting for price to actually from here come drop, tap into our point of interest, therefore we'll enter our position right here. We target that previous area of liquidity. So guys, hope you will see it. See, this is the narrative. It is the cycle of how the market moves. So it is driven by the liquidity sweep. After liquidity sweep, we want to see a break of structure. On that break of structure, we will observe that, okay, from that level of break of structure to the level of the liquidity sweep, it is an order block. The market will be attracted there. There will be a force that will pull the market downside so that they can feel again smart money orders here, therefore push. So that's it, guys. And remember, this zone again, there has to be our discount zone to be clear. So see, this is the move of a down of a sell position. This is a move of a buy position. So let's get into the live chat. Where is it? No. Where are we? Don't want to go far. So right here we observe that, okay, market was creating a high and lower lows. So we see here, this is a lower, this is a higher, a lower, a higher, a lower. So here you can see that right here, that's where our liquidity was lying. So we are putting everything together now. We are analyzing. It's not a break of structure. This is the liquidity sweep. I will show you the break of structure. Remember, we want a higher time frame, which is 1 hour. This is the Australian dollar versus the US dollar. So this is our liquidity sweep. Okay, liquidity sweep. Okay, after liquidity sweep, what do we want to see? We want to see a break of structure. So we observe the market again. I want to see a break of structure here. So you see that, okay, this is the high, this is the low, this is the high, this is the low, and this low, the market did what? Went up again to the high and breaks that low. So we can say that this is our break of structure right here. So this is a candlestick. Now it is not perfect like the lines that I was drawing here, because candlesticks they show that, okay, market went higher, okay, market dropped lower. Even here, market opened, went higher, went lower, went higher again on this same candlesticks, because you see that, okay, it created a low here and went higher, it closed higher, so the other one opened, so this become a low, so that low was taken out. So this is our break of structure. So break of structure, we have seen it. Right now we have to observe where the market is more likely to retrace back to. So in mind, we already know that, okay, this was the move from that liquidity sweep to actually this high that was created here, or I can say that, okay, this high or this high, yeah, this high that was created here. That's when I was analyzing, in mind having a narrative that market will come back and retest there. Let's say we don't have these ones here, this movement haven't happened yet, but we'll go on another pair to see actually this thing really works. So we see that, okay, this is our discount zone, this is our premium zone, this is our equilibrium, right? So price, we are looking for price to move up to our discount zone, which is from 50% to lower to 25%, or you can say 15% somewhere here. So, and again, this one I don't really like to show them on a chart. I just use it to measure again, and after measuring, I know I mark those areas. I know, okay, that area, it is always after that break of structure or inside that break of structure, because inside that break of structure it is an order block. So here is a break of structure to the liquidity sweep. This whole zone here is an order block. So see, you want to see it clearly. Yeah, this whole zone here is an order block. So you see, in this case we don't have a fair value gap because there is no gap here. This candlestick, there is a wick here, and a fair value gap is here. So yeah, this is a fair value gap. So in this case, we're not using this fair value gap because it is not on our zone here, which is the discount zone or the order block zone. So you can see that, okay, price went into our order block. When it went to our order block right here like this, what are we doing? We are actually scaling down to a lower time frame. Scale down to a lower time frame. Remember, we have observed a liquidity sweep, a break of structure, and an order block. So we have clearly a story behind our trade. So let's scale down to 5 minutes. After scaling down to 5 minutes, where were we? Yeah, after scaling down to 5 minutes, we observe again only 5 minutes to see what is actually going on. So we see that okay, here we had what, a liquidity sweep here. Okay, even on the lower time frame we have liquidity sweep. So because here the time frame are working in hand together, so this concept has to apply on all the time frame, but it is best to analyze on the higher time frame so that you can have a great entry also, because a higher time frame is more powerful than a lower time frame. So we saw okay, this is a liquidity sweep. After that liquidity sweep, come and observe again. This is what, this is our okay, this is the lower, a high, lower, high, and the lower. We broke this low here. So this low here, yeah, this low here will become our break of structure. So see, right now we are reading the candlesticks. So we broke the structure here. After breaking the structure, I'll see that okay, we broke the structure. After breaking it, we will mark again this zone. So this zone will form as our order block again on the lower time frame. So on this order block again on the lower time frame, this will actually be our entry, right? But we can see that inside again on this order block we have a fair value gap. Here is a fair value gap, guys. So you can see okay, this fair value gap is more likely to be retested, so price might come back here. But even though price came to the order block itself, it shows that okay, price is more likely to move down. You can enter. So even here you can enter here, short, enter for sell. You target the previous areas of liquidity. You can target this one or this one. You ensure that liquidity was hit, your take profit was hit. So again, price moved, price moved. So you're still observing. If you can see that okay, here on this fair value gap okay was not hit, but you can see the narrative. So here you entered. If you want to target a higher risk or a higher position, you can go back to your 1 hour again, your 1 hash again, to observe the price. So but eventually this was hit, this liquidity here was hit, which means this trade was good to enter right there. So even here price did what? Price came again to sweep this liquidity that was created here. Came again to sweep this liquidity that was created here. So and so on. So after creating that liquidity, break of structure, good. So we're just reading. After seeing liquidity sweep, we have to look for a break of structure. So here, break of structure, which means we have a new order block, which is this one. This is the new order block here. So after that again, you have to scale down After seeing that 5 minutes, on the 5 minutes, okay, price did what? Price came back here to tap your order block, and doing that again, price swap this liquidity here. Remember, now we are on a lower time frame. This liquidity here, liquidity okay. So after that, price did what? After sweeping that liquidity, price created this break of structure here. Just mark it fast, this break of structure here, or this one. So it's up to you. Yeah, I think this one will do because it's more latest one. So another order block again, so as you can see, price right now is on that order block, so which means this one, it is, I can say it is a signal to sell on Monday open up market open was paid. This is the Australian dollar. Yeah, so this is a signal for Monday market open. So sell, can target this liquidity, so you guys can see the building blocks. So what is more important to observe a liquidity sweep. After liquidity sweep, observe a break of structure. After observing a break of structure, mark that zone from your liquidity sweep to the break of structure. That zone acts as an order block. Wait for price to come back again to tap that zone. On that zone, you'll find your favorite gaps or anything. So let's go to another pair. Is this another pair? Or is what? Okay, let me go to higher time frame because this is the 5 minutes. So guys, yeah, here analyzed here. So this is what here already analyzed. This is liquidity that was lying here, was swept. After sweeping that liquidity, we had a break of structure. You can say this is a break of structure, or this is a break of structure. So but here price created what? A fair value gap. So huge fair value gap, which means okay, price might come back to fill that huge fair value gap here to target this liquidity that is lying here. So let's go to another pair, or let us observe. Okay, see if we might catch this buy here. So let's observe. Okay, this one we had a clear liquidity sweep, boom. After liquidity sweep, okay, let us read the candlesticks. This is the low, this is the high, this is the low that swept liquidity. After sweeping liquidity, it created the high here. So this high here becomes our break of structure. Yeah, break of structure. After break of structure, this zone here is our order block. So price did what? I will not scale down, just as you guys see, price did what? Came back to fill that order block. So you scale down here on the lower time frame to find a clear entry. So boom, we target that previous liquidity. Then here take profit will be hit here. So So let us try and look on some other pair. Let's try look on, what is this, the USD JPY. Let's see. Okay, USD JPY, we had so we swap liquidity here. Just observe it, guys. Swap liquidity here. After swapping liquidity, price moved up. After moving up, so price created what? A huge fair value gap. So guys, you see the fair value gap, this one, huge fair value gap. So in this case, the other block didn't work. Didn't work because price created a huge fair value gap. So price did what here? Came to fill this fair value gap. Here you target this zone. So if you can use the tool to see if really we are on the discount or premium zone for real. See, the tool says it all. This is the tool, yeah, exactly only 25%, 0.25. Boom, price moving higher. So you see, so the order block and the fair value gap, it is just a zone that will show you where exactly, specific point where price is more likely to retrace, because this tool doesn't show a specific price where price wants to retrace actually, but by you knowing the order blocks and fair value gaps, you will know a specific zone on that discount to take a clear entry. So after price is reversing like here, so you know that okay, this zone is at our discount zone, and here we are on a huge fair value gap. So price did what? Retraced back here. So that gives you confidence enough that to target the opposite direction. Boom, price reverse. Let's look on another pair. Look. This is what? What is this pair? The US dollar, this is the Swift French. It is okay. Right here, this one doesn't have a great movement that I want, so this one I don't think I like it. But by observing here, by zooming in, obviously we'll see an end, because you had the liquidity sweep here. After liquidity sweep, this is what? This is a high, this is a low, a high, and this low was broken. So this will become our break of structure. After break of structure, you mark that zone, which is from break of structure to the liquidity sweep, as your order block. So price did what? Price came, reacted to your order block. So it was a clear confirmation to sell and type this previous liquidity here. So guys, this thing happens everywhere, but it depends on you, that on that specific time are you available on the market, or when you're available on the market, can you spot them now? So guys, your homework is just to go on your favorite pair, go to the high time frame of your choice. If you want to take longer trades, you can look well, analyze well the monthly time frame and take your entries on the daily time frame. So, and also you can analyze the daily time frame and take your entries on the 1 hour time frame, or you can analyze the 4 hour time frame and take your entries on a 15-minute time frame, or you can analyze the 1 hour and take your trade on a 5-minute time frame. So yeah guys, let us check this. What is this? The AUD JPY. JPY. So guys, let me see that I'll be able to catch this huge sell here. So let's observe together. We had what here? Hey man, here we had this is a liquidity sweep. See that liquidity was swept. After sweeping liquidity, boom 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 boom, it went down, it went down, it went down, it went down, but it was consolidating here. So here we don't really have a clear entry or a clear confirmation that the strategy will work, because the price is consolidating a lot here. So what I can do, I'd mark this whole zone here as our strong resistance zone and wait for the market to come back here somewhere here. Therefore I'll tap for it to sell. But yeah, if you can look well then and ignore all this consolidating and come back here to this low that was created. This low can act as a break of structure, and okay, right, that's where we'll mark this whole zone from the liquidity sweep to the break of structure as our order block, and wait for price to climb up here and take our sell. So then let me see the tool. See the tool also says the same thing. We can wait for price to come back up here and look for our sell positions. So what is more important? Liquidity sweep, break of structure. If you don't see those two, you don't have a trade. So liquidity sweep, break of structure, and you can gold. So on gold, see here, I'm waiting for this liquidity sweep here. So I can see that okay, here this liquidity, but here I'm only interested to sell gold. So gold sometimes doesn't follow any technicals, it just flows as it wants to. But here I'm just waiting for a liquidity sweep here, and this zone here, if you watch part 1, this zone here was my strong resistance zone. So this will be my liquidity sweep, so price will sweep here. So I think after sweeping we will create a break of structure going to the downside. So I'm more confident enough that price will come reach this level and go back. If I'm wrong, hit stop loss, I'm okay. So guys, your homework today, remember, number one, you have to understand the previous video first of liquidity sweep. So go to the market, spot that liquidity sweep. After spotting liquidity sweep, look for a breakout structure. Yeah, then measure using this tool to see where price is likely to retrace back to. So after doing that, that's when you measure a zone where price is moved from your liquidity sweep up until it broke the structure. You mark that whole zone there. That whole zone will be your order block. So after that order block, you are good to go. You just wait for the market to come back and test the order block. That's where you will scale down to a lower time frame to look for entries. To look for entries, you actually follow the same procedure. Maybe look for the liquidity sweep, or look for breakout structure, or an order block right there, or a fair value gap right there. Hope you all know, you understand the concept right now. What is a fair value gap, and what is an order block, and what is an equilibrium. And yeah, that's it guys. Remember, it is what equilibrium, which is this thing. Equilibrium, that's what we need to understand, that equilibrium is actually the premium and discount zone. So the idea behind it is to wait for price to come to the discount. And what is, again, we have a breakout structure. Boom, 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 boom. Liquidity sweep, boom, breakout structure. So breakout structure, after breakout structure, a retrace back, then move. So that's it. Let me mark it. Breakout structure, liquidity sweep. After breakout structure to the liquidity sweep, it is an order block. Price did what? Came to tap the order block. After tapping order block, price, it is reversing. You target the previous liquidity, which is this one, or where, yeah, that's it guys. This is your homework guys. Don't forget to comment if you have some questions. So this is it guys. This is the strategy. I don't think there's anything else, but the next coming video will focus on CRT, which is the candle range deal, which also help us to maneuver trades on the high volatility days. On the high volatility days, which is days like on news days, or maybe on normal days where we have sessions with high volatility, like the New York session and the London session. So CRT really help us to maneuver there. But right now, this is what it is more important, and this is what is needed for you to take a proper quality setup trade. So guys, thank you for watching this video. Don't forget to subscribe, comment there. That's it. Dollar Chaser signing out.